Rezolve AI is a $6.87 stock that Grok actually says could hit anywhere between $47 and $155 per share next year, only if it trades at a relative valuation comparable to its peers. This is why we cover the stock on this channel. This is why we talk about Rezolve AI. Now, in the past 2 weeks, a lot have happened with Rezolve. There was 2 short seller reports on the company right before earnings. A lot of misleading things were talked about. A lot of blatantly false things were talked about. And then 2 days later, Rezolve had earnings that blew out everyone's expectations. Well, in the subsequent 2 days following earnings and after the short report, the stock was about $4.69 at some of the lowest points. Okay. Well, the stock today is back to $6.87. The stock has rallied over 30% in the last 2 days. But you know what's crazy about that? The sentiment was so bad. The bears were so in control. The RSI is only at 61. The RSI is still suggesting the stock could go through significant upside from here. And we're going to talk about in this video why this week could be such a big week for Rezolve, where not a lot of people are probably considering this. So we're going to get into that here in this video, some of the recent developments like price targets. Again, I'll give you a bit of a refresh if you didn't see the video over this weekend of what Grok says could happen to Rezolve over the next 12 months. I will share my position in this video. We'll look at some option activity as well. And last but not least, we'll talk about some of your biggest broader market news today. Ladies and gentlemen, welcome back to the channel here. Hit the like button, subscribe to the channel if you have not done so already. Check out the link down below in the description of this video if you want to come get involved with, hands down, the best trading community and investing community in the entire world. Yes, we do short-term trades every now and again, but really what we're focused on is finding those medium-term big winners. We want to be early in key fields like AI, robotics, gene editing, biopharmas, energy. These are not just fads, right? These are themes that are going to be with us for decades. And we want to find the small companies that are disrupting the big guys, that are breaking into new markets, that are pioneering new products and innovations like Rezolve. We want to be early. We want to be decisive. We want to take risks, calculated risks with large upside potential. Our trading community portfolio this year, where every single move has been documented, is up over 200% this year. I think that performance is going to get even crazier into the end of the year. I'm not a financial advisor. I'm not a financial planner. These returns are not guaranteed to last. We can do all of the work on our part, like due diligence, finding the companies, investing in them, etc. If the floor falls out in the AI trade, if we have another DeepSeek moment, if we have larger recession fears or something else, we can't control that. And it would be our job to react to that, or your job to react to that. And obviously, performance can vary. I'm not a financial advisor. I'm not a financial planner. This is not your get-rich-quick scheme, okay? In fact, quite the opposite. You could lose a lot of money. You could make a lot of money. I'm just here to point out the opportunities and what I'm doing. So if you guys want to come try it out, check that link out down below in the description of today's episode. If you have problems joining after you sign up, send me a message on Patreon. We'll get you squared away. But if you don't contact me, I don't know if you have an issue or not. With that said, let's get into today's episode. Okay, so first things first, I've kind of went over some of the recent developments. You had these short seller allegations and reports with Rzlv. That just was in a low blow. Rzlv was an easy target right before earnings. You have to understand these short seller companies were just looking to make a 10, 20, 30% short-term return. They have since, I would argue, exited their positions. Now, what happened in the process is they spooked some retail investors out of their positions. They likely didn't spook institutions at all, but they spooked some retail out of their positions. Now, this company is not a very well-known stock at this point, believe that or not. It's not like Nebius, it's not like Tempest, it's not like BBAI, it's not like SoundHound. It doesn't have the same kind of volume and dollars heading into the stock as those other names, okay? I think that will change. I personally think Nvidia is going to take a stake in Rezolve at some point, and I think that's when everything is going to change for the company. But the fact of the matter is everything did change for the company after earnings. It basically invalidated the entire short report. So there's a lot of retail investors that were in the stock that like the stock, like the technology, like what the company is doing, that were spooked out, that are starting to buy back in. There's a concept that I talked about last week called residual sellers. Okay, what that means is some people were selling the stock, were fearful after the short report, that continued to sell the stock. Specifically after earnings, the stock went up 20%, and then it over 20%, like 27%, 28% at the high right after earnings. It only closed up 1.61%. The day of earnings, October 1st, there was a lot of residual sellers that are like, okay, the stock's fading on earnings. I'm just going to sell out. I'm going to take the loss or take my profits, whatever, be on my way. What happened the next day, as I said, you started to get analysts coming out, giving their thoughts on earnings, giving their higher price targets, right? Then the residual sellers had kind of all sold, and the buyers stepped back in. I think this week could be a big week for the buyers stepping into the stock. Not even from a retail perspective, but from an institutional perspective. Okay? I think the institutions are starting to get word of Rezolve. Okay? The kind of numbers that Rezolve just put in writing are massive. 150 million in ARR for this year, 500 million for next year, with the idea of exceeding those numbers, means Rezolve is trading at dirt cheap valuations. Dirt cheap valuations. Okay? You don't find these kind of valuations in AI stocks all too often. Okay? I actually had a video come out over this weekend where Grok actually predicted where Rezolve stock could be. I'll type the prompt. Where could Rezolve AI stock go to next year? And let that generate for a minute. But basically, Grok was talking about even if Rezolve just trades at a multiple relative to its peers on a price to sales basis or price to ARR basis, the stock could be anywhere from $47 to $155 on the high end. Now, on the high end, that would involve basically flawless execution, probably $1 billion in ARR by the end of next year, right? Those are possible outcomes. But when you're looking at upside, the kind of size and scale of Rezolve, this is getting institutions involved, okay? Because institutions are looking at Rezolve and saying, wow, this thing has opportunity. In fact, there's a business associate that I have, a friend, honestly, at this point, that has a lot more money than me. He actually is a client of Morgan Stanley, and Morgan Stanley invest on his behalf. I was talking to him about Rezolve, just basically the guidance the company put out, the valuation that they're trading at, even at this point looks very attractive, right? Very, very attractive relative to other opportunities in the market. I was talking to him about the white paper that Rezolve just put out showing the competitiveness of Rezolve's large language model, specifically in commerce. It beat ChatGPT, it beat Claude, it beat everyone else in retail commerce. That's big, right? Well, basically, he talked to his Morgan Stanley guys, and the Morgan Stanley guys said, yeah, there could be some serious opportunity in Resolve, and they are buying some on Monday. Now, this is anecdotal kind of shit, right? But I think institutions are really going to start to get involved in this one. Okay, just my thought. Now, I also think, again, NVIDIA could likely be taking a stake soon in the company. It's kind of in NVIDIA's ballpark with the kind of valuation that Resolve has, the hyper growth that Resolve has, the size of the company. I wouldn't be shocked if they take a stake in Resolve. Now, back in April, I was heavily invested in Nebius. Okay, Nebius turned out to be one of the fastest successful trades in this channel's history. Okay, back in April-ish, the stock was in the 20s. I was buying it. Today, it's $128 per share. Okay, some crazy returns came out of that one. Well, a lot of the big moment for Nebius was when NVIDIA took a stake. That's when people started to say, oh, wait, what is this Nebius company? What are they doing? Data center stock here, right? Well, Rezolve is one NVIDIA 13F filing away from becoming mainstream, becoming like a SoundHound or BBAI, where people that aren't even invested in those companies know about them, right? Rezolve is not a company where people just know about it. And with the kind of numbers, the growth that we are seeing with Rezolve, the market opportunity of Rezolve, AI commerce is multi-trillions of dollars. This thing could explode. Now, in this upcoming week, I expect the earnings are going to be internalized. What does that mean? Well, not necessarily as much of trading is going to be taking place, but more people are going to say, wow, this company could be the real deal. And more institutions are really going to start buying the stock. Now, as we've talked about before on this channel, one of the things I really like about Rezolve, minus everything else that we always talk about, is the share structure of the company. A lot of stock, 30-40% of shares are owned by insiders in the company. So they are winning if you win, essentially. A lot of the company is owned by early adopters of retail, like myself, that have no plans on selling. Institutions own about 10% of the company. They've just started buying. And private companies owned about 14% of shares. There's been some dilution since, some of these numbers. So they're going to vary a little bit. But there is a lot of the stock bought and held right now that is not really trading. That's why utilization is at 100% on Ortex. That means there's not a lot of shares freely trading out there. So as you start to see more people buying into Rezolve for a long-term perspective, for a long-term basis, like institutions, it could cause a dramatic rise in the company. Now, short interest is only 8.5%, which is actually a good thing, right? You don't want to see a stock with 50% short interest because that can raise some alarm bells, right? The fact that institutions are not going out and shorting Rezolve is a good thing. But you do have 8.5% short interest with a float structure, a share ownership structure that is very much buyers and holders of this company as early adopters. So the short interest could be 3 to 5 times in reality higher than 8.5%. Because there's not a lot of shares out there freely trading hands. What happens if short sellers try to cover even a small amount of their position? Well, on Friday, 300,000 shares tried to get covered out of over 13.5 million shares that are sold short, and the stock went up 8%. The day before, it was up 24%, and I believe you had some similar numbers, right? Well, you had 900,000 shares that were covered on Thursday. The stock went up 24%. Big moves can take place when you have a setup like Rezolve. And I think this week, the residual sellers are gone. And I think it's going to be a big week for the buyers. Now, obviously, broader market conditions, that's going to be a factor. The stock has went up 30% in 2 days. That is a factor. But then I look at something like the RSI only at 61, and I'm like, wow, well, there's still plenty of room from a strength perspective to see a breakout from here. It wouldn't surprise me if Rzlv is testing the $8, $9, $10 levels this week. Now, I don't know exactly when NVIDIA's 13F filing is supposed to come out. I don't know exactly when this is supposed to come out. But, should be relatively soon. So it says the report is submitted within 45 days after the end of each calendar quarter. So 13, the actual filing could come out some point in November, and that's going to be something I'm watching very closely. To some of the biggest news over the past 12 hours or so that could affect markets in this upcoming week, which could affect Rezolve. Now, White House economic advisor Kevin Hassett said that layoffs for federal government employees will begin if President Donald Trump decides that negotiations to end the government shutdown are absolutely going nowhere. Hassett expressed optimism that negotiations this week could resolve the impasse. His comments come as the government shutdown enters a new week with no clear off-ramp in sight. So we don't really have any good news to report. There is a vote happening today in the Senate, and we'll see how that goes. But there are some very big holdups in getting the government funded. Now, good news is Wall Street's not freaking out over this. Good news is that, in fact, the bias is, as the government is shut down, as we are not getting BLS data. That's not great because we don't know exactly where the economy is at. But the bias is for the Fed to accommodate the economy. The bias is, or the biggest risk is, that the labor market unexpectedly weakens in the next couple of months. And by the time the government opens, the labor market is even worse than it is today. That's the risk, right? The risk is not that you do nothing and inflation skyrockets in the next 3 months. That is not the risk. So in a weird way, the government being shut down could actually be a positive for stocks, right? Which historically it is, right? Baseline, the last 5 government shutdowns we had before this one, that this is going to make the 6th government shutdown, they've been bullish. Like S&P up on average over 3%. Technology leads towards the end of a shutdown. Once it's getting resolved, financials tend to lead. Small caps tend to lead on the back end of that. 10-year treasury yields tend to fall about 10 basis points, okay? Really doesn't have any implications for like a credit downgrade. Fitch just recently came out and said this government shutdown, no matter how long it lasts, is not a reason to downgrade U.S. credit. So minus a downgrade, you're fine, right? This government shutdown doesn't mean much, but it does create a bias to cut rates within the Fed, even if we're not going to be getting economic data. And that's why the markets are even more so recently pricing in a cut October 29th. There is a 99.6% chance of a cut October 29th. There is an 84.1% chance of another cut December 10th. Okay. There is a 41.7% chance of another cut January 26th. 50.2% chance of a pause on January 26th. Okay. So the odds of rate cuts are actually going up. There's an 18.5% chance of another cut March 18th. So basically a cut at every Fed meeting through March of 2026. There's a 20% chance of that. There's a 45.5% chance that you get a cut at every Fed meeting through January. Okay, and we hold steady at that rate in March. So yeah, the odds have risen for many consecutive Fed rate cuts. Now for December 9th, 2026, there's a 28.3% chance of the federal funds rate being between 3 and 3.25%. That's the highest likelihood at this point. But there's a almost 27% chance of the federal funds rate being at 2.75 to 3% by December 9th, 2026. So, I mean, government shutdown, whether it gets resolved or not, it's not really a negative for stocks. But if we do see the government actually resolve this government shutdown, I think it would be a positive knee-jerk reaction for the markets. Now, there's also this headline on CNBC that says investors aren't the biggest or the market's biggest loser if Trump and the SEC end quarterly reporting. So the fact that this is being talked about more, the fact that it seems like people are growing a little bit more comfortable and maybe ending quarterly reporting means that if this actually does happen, maybe it's not as big of a surprise than, was thought, okay? The idea was first proposed by Trump in 2018. And basically the accounting firms would be the biggest losers. These four here, Deloitte, EY, KPMG, and PwC. They said back in 2018 that they would lose about 15% of their audit fees if they stopped quarterly reporting. So we'll see what happens. This is definitely a potential risk to watch for if we start to hear news of the SEC actually taking steps to get rid of quarterly reporting. I don't think it's going to happen, but it is one of those things where it could make Wall Street a little bit, like you could see how it could create a little bit of uncertainty. Secretary of State Rubio says no one is claiming this is done. I believe this is in regards to the Israel-Hamas potential peace deal. Rubio says hoping it will be finalized very quickly early this week. Rubio says 90% of this has been worked out and we're just sort of finalizing the logistical piece. Rubio says closest in a long time to no hostages being held by Hamas. Trump says he will know soon if Hamas is serious. Trump says Netanyahu is on board to ending the bombing in Gaza. Trump said this to Netanyahu, quote, "You're always so negative." Axios reports that after Hamas issued its response, U.S. President Donald Trump called Israeli Prime Minister Benjamin Netanyahu. When Netanyahu dismissed the development as nothing to celebrate, Trump replied, "I don't know why you're always so fucking negative. This is a win. Take it." Rubio says that Hamas agrees in principle to post-war plans. So let me know your thoughts on all of this down below in the comment section. Hit the like button and subscribe to the channel if you have not done so already. Check out the link down below in the description of this video if you want to come join the trading community. Again, we gave a pretty good overview at the start of this video, but we're looking for big winners. We're looking for high quality companies that are trading at suppressed valuations relative to their peers that we think can have some massive upside potential. That is the strategy. Contact a financial advisor before making investment decisions. I am not one, so contact your financial advisor and don't be a jackass. Check it out, link down below in the description of today's episode. Have a great rest of your day. Go Lions, baby, and I will see you in the next one.